day.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the DowJones30 futures chart. Just before I start today's video, anyone who's interested in joining my signal service, then please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small joining fee of $29.99. But let's have a look at the DowJones30 here. Nice green way to start the day here on Tuesday, up around 0.6%, taking out yesterday's losses. Currently find ourselves trading exactly where we were at the close on Friday. I was just saying over on my S&P 500 video that I don't really know where the market's going to be this time in 12 or 24 hours time, or this time next week. I don't really know. Your guess is as good as mine. But what I do have, I do have a belief that the market, let's say if we draw two circles up here, one near the all-time high and one here near the 16th of June low, my personal belief is that, come year end, we are going to be trading closer towards the previous all-time high that we achieved back in January, rather than closer towards the June 16th low. And I'm not saying that we are going to go and hit that all-time high, but what I am saying, if we're trading here, for example, that would mean that we're closer to that all-time high than we are the June 16th low. That's just common sense. So that's what I'm trying to say here. But I actually do welcome a move towards the downside. So if we did go and, perhaps go and test 31,300, well, then that's fantastic, because I'm going to continue to dollar cost average towards the downside. And if we did go lower, fantastic. It creates more value, and I'm going to continue to add positions. I will have a stop loss just under the June 16th low. And, again, my ultimate belief is that once we get through September, which, historically is not a very strong month for the stock market when it comes to seasonality. But once we do get into October, that's when things really start to flip to the bullish side. And I think by year end, we will see a nice strong rally. And that's when we could potentially see the market trading closer towards that previous all-time high. And that's when potentially a lot of my dollar cost average positions will start to become profitable. So that is my strategy going forward. I'm not trying to predict where the market's going to be day to day, because the volatility is just so intense at this moment in time. It's incredibly difficult to do so. And quite frankly, I'm not a hedge fund. I don't have all these amazing and wonderful tools that most hedge funds do. I'm just sat here with my technical screens and my own fundamental beliefs. But I've been through routes like this in the past, and we always do come out the other end. So I am looking to dollar cost average towards the downside, stop loss below June 16th low, with the belief that the market will eventually, pair all of its losses and go and trade and break above last week's, or 2 weeks ago, swing high up at around 34,400 and go and target around 35,000.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.